Okay, so in this video, we're going to talk about IBM. This is a little different than I talked about TSEM in the quantum defiance ETF, but that was a breakout. This one is a pullback and really the last line of defense. So you can see it's negative 2.81% below its 40-week moving average, which equates to the 200-day moving average. However, if we look at IBM here in the chart here, or in the table here, where I have where I'm sorting this by what it is above or below the moving average, where this is negative 10%, and then I have it in ascending order. IBM does have 6.94% of alpha on the market, which is very low, but it still does have alpha on the market over the last year. So we're looking at 1 year of alpha here. This is a long term. Now I'm just going to go through the daily, the weekly, the monthly chart. We'll look at the daily candle so we can look at the support and resistance in there, and you can look at the candles if you like. I'll look at the 5-year chart on a weekly time frame, and then we'll look at the Chaikin Money Flow, the trend channel, and the MACD. So let's go ahead and get right into that. I have a video called Stock Analysis for Spreadsheets, and that explains everything we're looking at here. If you don't understand what we're looking at, watch that video. It's about 13 minutes long, and then you'll know what you're looking at. We'll start here with the daily moving average. You can see the long-term moving average here, the 189-day, because we're just going to use the long terms here because we are pulling back to this. Over the last year, this is a 1-year chart, we have been in an uptrend. However, we've broken down below the 189-day moving average right around August 8th or so, and we've been under it. So we're looking to get back above this. We're 3.14% below our 189-day moving average. We need to get back to about 250 to get back above that. You can see here that we had some relative volume to the negative that broke us down here. That was on July 24th. So that was the first indication right here that we were going to break down below this moving average when we get this big relative volume. And we are below the 50 line on the RSI, and we haven't come back above it. If we go up here, we got way oversold into the teens here, and we are starting to come back up. We'd like to see this go back above 50 RSI. Now we can look at this on the short-term moving average, the 21-day. You can see we're broke down and it's trending down, so that's bearish. The 63-day is starting to trend down, so we want to see this turn back up. But we may have support here, and I'm going to show you on the monthly time frame. But first, we're going to go through the weekly time frames. On the 189-day, if we use Fibonacci retracement for 189 days, we will look at the we're negative on the Chaikin Money Flow. We're at the 62% level, so we're just below the golden zone. So just like we're just below the moving average, and we were at the 63% level. This may be support here. You can kind of see we're just hovering here. It hit 237. Now we're at 242 several days ago. We have, we went from all buy signals here to, 2 sell signals. We still have a buy signal on the 63-day, which just means the 63-day is above the 189-day. This is the percentage we've been above or below the moving average. We're looking at the 189 right here. If we go to the weekly moving average, on the 4-week time frame, we have broken down, but it looks like we're trying to break back above that. That would be equivalent to the 20-day, and that uses Friday closes for pricing. Same for the 10-week. Uses Friday. All the weekly moving averages use Friday closing prices. This is trending down, and we're well below it. We're 9% below that. The 30-week, we're about 6% below the 30-week, and about the 40-week, we're about 2.81% below the 40-week. And if we go over to the right here, we can look and see what where we've traded below the 40-week. So right here, above or below the 40-week. For the last 3 weeks, we've been below the 40-week, but for several weeks before that, if we go all the way down, we're going back to 2023. IBM has been in an uptrend since its long-term moving average since July 21st, 2023. We broke above the 40-week moving average, and we've been above it ever since up until the last 3 weeks. Now, if we go to the monthly moving average, we're at the 12-month. We are 0.63% above that 12-month moving average, and we broke above this. Looks like about July 31st, 2023, and we have held this as support ever since then. And right now we're 0.63% above it. So to me, this is like the last line of defense. If we stay above this, and monthly moving averages take out the gyration. So you may see this go down throughout the month, but when the month closes, we want to be above this. Or just like any other moving average, it may break down slightly below it, but then come right back up above it. Like you see that here, where you come above it, and then it breaks down slightly below it, and then it comes back above it. So it looks like it's going to break out here, and then it pulls back to at 148 on November 30th, 2022, and then it pulls back to 126 on April 30th, 2023, before it breaks back out and stays above this long-term moving average. And that's the 12-month. Now, if we look at the 3-month, same thing, we've broken down, but it is trending up. We're about 10% below the 3-month moving average. The 6-month moving average, we're just slightly below that, but it is trending down. So, and then we are going to look at the 10-month. We are holding the 10-month as of the close of July 31st or July 30th, but right now we're 1.76% below it. So you want to see this get back above 246 based on the 10-month, and then on the 12-month we want to see it get back above. It's still holding above the 240 line. So this could be support, and this could bounce from here. This is in a long-term uptrend. We'll look at the daily candlestick chart because I have support and resistance there. This right here is showing support. This could be the support line, and right now we're sitting at 236.90, so you could use that as your stop if you wanted to. Now that's not a suggestion, that's just got some guidance for what you might want to use for a stop. And you could, if you're a swing trader, this could be going all the way back up to 290.79. I think it peaked at the end of June around 294, so this is pretty much the high right here. Let's see if we have, I think it was right around here, 291. I think it, oh, right here, I think 294.78 on June 30th. So the last day of June. Now, if we look at the 5-year chart, we are looking at the 30-week right now. We are in an uptrend. We've broken down below that. We're 5.76%. But you can see this is just a trend channel, or a trend line of the 5-year price action, and we're still above that 5-year trend line. If we look at the 40-week, we're below that by 2.81. You know, the same thing. It's going to be the same as the other one. This is just the 5-year chart. This will be the same on the 4 and 10 as you looked on the weekly chart. And then if we go to the trend channel, this is where it gets interesting to me, and I think this is got some positives. There's some negatives and some positives. So the negative here is we're below the bottom. We're in an uptrend channel, so that's positive. But we're below that lower line of the uptrend channel. That's negative. So we want to get back into that channel, and that would be 249.60 to get back into that. Can't quite get this right on the, today is the 24th. We have one more day of data, but I can never get it to the 22nd. It's around 250 that we want to get back up to. And you can see the MACD has gone from bearish signal all the way back in early July to just going back into a bullish signal well below the 0 line. You can see the histogram is starting to expand. So that is bullish. This has had accumulation for most of the year. However, we've gone into distribution. We are slightly below the 0 line, so we want to see this bounce back up. But for all those reasons, I think IBM is a low risk, high reward play, because if this trends back up and turns like I expect it to do, but it doesn't mean it's going to happen. You know, you still got to protect yourself with stop losses. You know, do your own due diligence. I think you have, you know, maybe $300 to upside, you know, and put a stop loss in at 235 or so. You know, that's $7 in downside. That's a great risk to reward. You know, or maybe 230. You know, it's up to you. It's up to you how much money you're willing to risk. So that's all I got for this stock. This is a little different than a breakout. This is a stock that's been in a long-term uptrend that is pulled back to key levels, and we're hoping, you know, that it's going to bounce from here. The charts are telling us it's going to bounce from here, but sometimes these charts do lie to us, and we get things wrong. So that's what I got. If you like that, consider hitting the like and subscribe button, and thank you for watching.